Jeffrey Christian is the managing partner for CPM Group. He is also a keynote speaker here at the Denver Gold Forum, and he joins me now. Jeffrey, thanks for being back with us.
Always a pleasure.
So excited to talk gold with you today. Last time you were on the program, you said to me, look, unless we get more negative news out there, gold will not budge. That was a few months back. In fact, gold has not really moved. What's it going to take now?
It's the same thing. I mean, I think what I actually said was negative economic news, and we really haven't seen much negative economic news. If anything, we've been seeing some positive economic news, and we're sort of stuck in that same place. And I still think it's going to take some combination of economic data that causes investors to become more concerned about stocks and more interested in gold again.
Well, let's talk about the economic news. As you mentioned, it has been positive. Do you think it's painting a realistic picture?
The realistic picture, I think, is very mixed in that you have a lot of short-term positive economic data, even as the longer-term issues continue to compound themselves. So that you really are working up to probably a period of negative economic activity, but it might be 2019 or 2020 or even later before it comes. But if you look at what's happening with the budget deficit, if you look at what's happening with interest rates, employment looks really good on the surface, but if you dig down underneath the surface data, there are issues. Industrial production, capital investments look pretty good, but if you dig down underneath them, there are signs of topping out. So I think that the economic data is relatively realistic right now, but that people are focusing on the short-term headline data as opposed to the underlying longer-term trends.
Let's talk the Fed now, Jeff. You and I both attended a dinner, with closed-door remarks with a former Fed head who said, look, more interest rate hikes will be coming. How hawkish do you think the Fed can get?
I think the Fed won't get very hawkish. I will say this. That was a very interesting dinner because this is a guy who worked for Bush when he took a $250 billion surplus and turned it into a $400 billion deficit. Then he went over to the Fed and was at the Fed in 2007, 8, 9 as they almost destroyed the global financial system. And people were listening to him and taking his advice. And I'm thinking, like, what kind of person would take the advice from someone with such a sterling resume? Now that said, I think that the Fed will continue to raise interest rates, but they are not going to be hawkish by any stretch of the imagination.
So do you think that Powell's doing a better job than Bernanke, or is it also given, the context they're working within?
Yes, absolutely. Yeah, I think that Powell is doing a much better job, and I think he has a lot more experience and knowledge and a lot better understanding of interest rate markets and Treasury operations.
Finally, Jeff, you're a keynote speaker here at the Denver Gold Forum. No small feat. What's your main message to attendees here?
Well, what I was doing at this conference was a prescriptive talk. I was talking about ways that we can help investors make more money investing in gold by seeing it not just as a long-term insurance policy, but also a short-term investment, and also ways that central banks, if they start using gold more for monetary policy purposes and not just as a sterile monetary reserve asset, that they would probably be buying more gold. So I was laying out a series of prescriptions for gold investors, central bank investment gold demand, and also investors in mining companies as to what could be done to make gold and gold mining shares more profitable and thus more interesting to investors and gold to central banks.
Well, give us just a little bit of insights there. What could make mining stocks more profitable?
Well, I think that you have to change the way that mining companies work, and you have to change the way that mining investment funds work. Mining companies have to realize that their success is determined or measured in dollars of profit and not in ounces produced. And you're starting to see some companies do that, but they have this nasty proclivity to want to grow output even as they reduce the per unit profits. And that's a negative for the investors. In terms of the investment fund management, sector mutual funds are almost designed to lose money. And I think that you have to move away from what we call true believer gold funds, mining funds that invest based on the true belief that someday gold will be $5,000 or $10,000, to more agnostic, profit-oriented mining management.
And do you think that the mining sector is listening? Are they receptive to change and make these adjustments?
No. Sorry.
Chef Christian, thank you so much. Thanks for watching. We'll have much more for you on Kitco.com.